The suitable investments can provide you with an additional source of income, help you fund your golden years, or even get you out of a tight financial situation. Most importantly, investing enables you to achieve your financial goals and increases your purchasing power over time. Thus, we've outlined 8 assets that'll outperform cash by 2022. Indeed, investing is necessary for most people to enjoy a comfortable financial future. In the aftermath of the coronavirus pandemic, the economy turned on its head quickly, leaving those who weren't prepared to scramble for income. Find out what investments are suited to earn during tough economic times, as well as those that'll provide security and peace of mind. But before anything else, don't miss out on any video updates. Make sure to subscribe. Number 8. Certificates of Deposit. Certificates of Deposit, or CDs, are a good choice if you don't need immediate access to your funds. Still, you'd like to earn more than a savings account, says Kevin Matthews, a former financial advisor and founder of the investing education website Building Bread. In addition, CDs are insured by FDIC to the same extent as other types of deposits. As with savings accounts, CD rates are likely to remain low for 2 years. Longer-term CDs tend to have higher rates, but be aware that they lock up your money, reducing your liquidity, and you usually get charged penalties if you withdraw your money early, typically a few months of interest. CDs with no liability offer lower yields, however. Number 7. Gold. Investing in gold is considered one of many investors' safest forms of investing. The short-term price swings can be as drastic as stocks and other risky assets. However, gold may hold its value in the long run. Gold is a safe investment, but you have to consider several factors depending on your needs, says David Stein, a former fund manager and author of Money for the Rest of Us. As a monetary asset, it enables investors to diversify away from dollar-denominated assets, if that's what they're interested in. Number 6. U.S. Treasury Bonds. It's widely considered the safest investment on earth to purchase U.S. Treasury bonds. Treasuries are considered a highly secure investment because the government of the United States has never defaulted on its debt. According to Matthews, a low yield on treasuries has made them less attractive in recent years. The Treasury Inflation Protected Bond, or TIPS, offers some inflation protection, however. You can purchase government bonds directly from the U.S. Treasury or on secondary markets through an online brokerage platform. Matthew warns against the secondary market since resellers often tack on additional fees while you can purchase. If you're interested in treasuries without any costs, you may go through treasurydirect.gov. In addition to mutual funds and ETFs specializing in treasury securities, exchange-traded funds, or ETFs, hold only U.S. Treasuries. By doing so, you can avoid the hassle of purchasing individual bonds and not have to deal with the hassle of selling them on the secondary market when the bond matures. Number 5. Series I Savings Bonds. You can earn an interest rate while resisting inflation by investing in Series I savings bonds, government bonds whose yields cannot drop below 0. According to Stein, TIPS can post negative yields. Stein says the next 6-month compound rate for Ibons is 1.6%, better than a high-yield savings account. A little tricky with regards to your Social Security number. However, you're only allowed to invest $10,000 each year, although you could get around that by using your tax return to buy Ibons in addition to making a separate purchase. However, there's one important caveat. Ibons earn interest for up to 30 years. If you cash them out before holding them for 5 years, you lose 3 months of interest, just like many CDs. You can liquidate them for 1 year with the government after holding them for 1 year. Number 4. Corporate bonds. Consider corporate bonds if you're looking for higher yields. The interest rates they offer are generally more competitive, but they also carry a higher level of risk as only a few companies can match Uncle Sam's history of repayment. If you want to make a safe investment, you should review the rating on bonds. Matthews recommends investing in corporate bonds that are investment grade, which generally means a rating of AAA, AA, A, or BBB. Higher yields are possible, but the risk is also higher. Bonds can also be bought online through a broker, but Matthews warns that bond transactions are often more expensive than stock transactions. Bond mutual funds and bond exchange traded funds, which invest in hundreds or thousands of company bonds, are an excellent way to avoid fees and reduce the risk of any company defaulting. Today, most brokerages offer index-based ETFs and mutual funds without trading fees, but it's still good to double-check and to be on the lookout for load fees when purchasing mutual funds. Number 3. Real estate. According to Manoj Dalmia, founder and director of Proficient Equities Limited, real estate is one of the most timeless investment opportunities available to date. Real estate may provide decent income depending on local market conditions. Regardless of whether you invest in a commercial or rental property, you'll get consistent income, preventing your portfolio from being affected by market fluctuations, says Matthews. A 25-year average appreciation rate of 3.8% is relatively low for real estate. There are also a variety of other costs associated with real estate, such as property taxes and maintenance fees, and it may require a large initial investment. To gain more exposure to real estate more liquidly and at a lower cost, some people might recommend investing in real estate investment trusts, or REITs. In volatile markets, REITs are risky assets, and they can't serve as a haven for your money. Number 2. Stock market. Preferred stock is a hybrid security that combines the attributes of both stocks and bonds. Due to their guaranteed dividend payments, they offer the income potential of bonds and the ownership stake and appreciation potential of common stocks. There is, however, a downside to preferred stock appreciation. Over time, market values may increase more rapidly than bonds and decrease more rapidly when the market falls. So why are they a safe investment? Since preferred stock dividends are almost always guaranteed, you'll get income regardless of how the stock performs. There might be some risk associated with these investments in terms of market risk, as capital appreciation can be an issue in a down market, says Stein. However, higher dividends might provide some income protection. As we reveal the top earning asset of 2022, we'd like to highlight one of the upcoming investments you might be interested in. Virtual assets in Metaverse. Metaverse has become a hype recently. People can buy virtual assets such as lands, parks, and statues being sold for millions of dollars, explains Manoj Dalmia, the founder and director of Proficient Equities Limited. As of 2022, the most lucrative investment is cryptocurrency. Yep, these digital currencies have no physical presence, making them one of the hottest investment areas. In addition to crypto mining, they have proven to be one of the best investments. Because this technology keeps advancing, it's believed that cryptocurrencies might eventually overtake traditional assets as an investment. According to Manoj Dalmia, founder and director of Proficient Equities Limited, cryptocurrency investments such as Bitcoin, Ethereum, and Dogecoin have given massive returns recently. Cryptocurrency is ideal for risk-seeking investors who wouldn't mind if their investment went to zero at the prospect of much higher profits. This is not the perfect choice for risk-averse investors or those seeking safe investments. Cryptocurrencies come with significant risks, including rendering any individual currency completely worthless, such as outlaw ships. Cryptocurrencies are highly volatile and can fall or rise drastically, even over brief periods, and the price depends entirely on what traders are willing to pay. Given some high-profile thefts in the past, traders are also at risk of being hacked. If you're investing in cryptocurrencies, you'll have to pick the winners that'll survive, although many could disappear altogether. So just a piece of advice in determining what to invest in, you'll need to assess several factors, like your risk tolerance, time horizon, investment knowledge, financial situation, and how much money you have to spare. Keep in mind that investing involves a trade-off between risk and return. A balanced approach may be of choice to ensure that your money is safe while still giving yourself the potential for long-term growth. There you have it, folks. Some of the assets in 2022 that are better than cash. So what are your thoughts? Which of these would you risk spending your hard-earned money on? Comment below and let us know what you think. For more videos, make sure to drop a like and subscribe. That's it for now. Thanks for watching the video and see you next time.